Okay, because I am ready. Good morning, everybody. Okay, so my name is Tyrone Jackson. For those of you who don't know me, I'm also known as the Wealthy Investor. Thank you for that thunderous round of applause. I appreciate it. Thank you. The one guy over here, I appreciate it. It's very nice of you. Sit down, sit down. I can't tell you how much the warmth is going through this room. We're going to have a lot of fun for the next 45 minutes. Let me sort of kind of take a sample here so that I can adjust my talk so I don't stay too basic or go too high. How many of you trade just stocks? Anybody trade just stocks? Raise them high so I can see who you are. Cool. Anybody sell covered calls against stocks? Oh, thank you. Everybody's trading options. Who is an options trader? Raise your hand if you just trade exclusively options. Excellent. And who's paying too much money in commission while trading? Cool, because we have to talk about that today, okay? So what I'm going to do is I'm going to go through my presentation. The thing that I am most concerned with is my ability to help you understand my approach. So I'm probably going to leave a little bit more time for Q&A because that will help me help you with my responses. And what I'm going to attempt to do here is just help you make a lot of money within the next 36 months. Thank you for the applause. You see, you're not really picking up the cues. Okay. So let's just get started. I am a huge fan of simplicity. Now, I know at a stock trading conference such as this, simplicity is not the thing, because you got a lot of smart people here who are very well known, who are teaching you all these wonderful strategies and charts and numbers and analysis and statistical outcome and probabilities. And here's what I found. To make $1 million in the stock market, most of that you just don't need. Oh my goodness. Did he just say we don't need all that complicated stuff? Not really. You see, in life, there's a lot of money in just keeping things simple. So today's approach hopefully will inspire you to stop spending so much money at TD Ameritrade and Fidelity clicking. And this is going to make me very unpopular here today, but I don't care. I'm good looking. I look like Denzel. I'm swarmed wherever I go through the hotel. So I got that going for me. Are you ready for me? Okay, here's the game. Everybody wants to teach you high clickable strategies so they can make more commission. Let's think about this here. A lot of the strategies that some of you are learning require you to constantly be active, which means you're going to spend more money in commissions. If you spend more money in commissions, you are going to keep less of your trading profits. So here's what all of the big brokerage houses actually know, that most of you did not come from a family worth $300 million. Do you realize that? Right. So most of you, like me, came from a working class background. There's this association when you are working class that the busier you are, the more money you make. I was raised by a single mother in a place called Staten Island, New York. Anybody ever hear of Staten Island? Perfect. I like to refer to it as where dreams go to die. Because do you know what happens in Staten Island? Nothing, right? So you don't really have a lot of big hopes and dreams. And my mother used to tell me, when you grow up, the biggest thing that you could ever do in your life is get a job that pays overtime. Because if you pay overtime, at least you could make a little bit more money than the average person. But remember, the IRS used to have a saying, the more you make, the more they take. So although you'll work that overtime, you'll be busy, you really won't get ahead because you have to pay taxes. So today, my life is totally different. I have a home in Los Angeles, and I also have a home in a part of New York called Rhinebeck. If anybody knows where Rhinebeck is, it's all horses and cows. It's where Chelsea Clinton got married. Oprah was there, and she stayed at my house. That's not true. I just figured I'd throw that in. Okay. So when my mother walks into my homes today, she doesn't really understand what I do. She just goes, "This is really nice." Okay? Why? Because I decoded something in the stock market, right? So I'm going to tell you up front, I am not brilliant. I'm not brilliant at all, but I do know how to count to 10. And what they don't tell you is if you know how to count to 10, you could be really rich within 5 years in the stock market. So I brought my approach, the wealthy investor approach, to all of my students, mostly online, and I help people make residual income in the stock market. So I just want to prepare you for, as we move forward here in the next 39 minutes, this is going to be really easy for you to understand. But it's not going to seem highly profitable because it cuts your commissions down and it increases your profit. You get to keep more of that money. So I'm going to talk about something that is like a 4-letter word here, and it's called holding stocks. Oh my God, did he say like hold some stocks? Yes. Why? Because one of the things I discovered is wealth is nothing but a series of positive habits. If you really want to be rich, just do what the rich people do, right? So if they're holding stocks, then that means that I should be doing that and you should be doing that somewhere along the line. Why? It's what wealthy people do. Do you think Mark Zuckerberg, anybody ever hear of Mark Zuckerberg? Raise your hand. Okay, right? He's a billionaire, is that right? Right. He's flipping houses on the weekend. Probably not. He's trading options. No, he's not. He's holding some of his stock. Why? To become wealthier. If he ever sold Facebook, he'd get paid in cash. Some of you know this. And he'd also get paid in stock ownership in the new company. So all I do is do what rich people do, and then I get richer. Thank you with the applause again. I'm really touching most of you. But the rest of my presentation is really not about me. It's really about you. So here's what I want you to think about for the rest of the day. Some of you are not going to agree with me, and investing, that alone can make you a lot of money. But not all the money is fast. Some of it takes 3 months, 6 months, a year, and you see these fantastic results because you're doing what millionaires do. So we have to change our thinking if our goal is to get to the $1 million level within a defined period of time. And our thinking goes like this. How many of you are here because you'd like more income in your life? Raise your hand. Hi, 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 hi. Perfect. That's the problem. That is you didn't see that coming, did you? That's the problem. See, they keep telling us we want more income, and what you really want is more what? Residual income. You want income that just comes in whether you work or not, whether you travel or not. I'm not trying to tell you that the strategy that you're currently employing in the stock market is wrong. I'm just trying to get you to embrace another approach. Where are my option buying people? No trick question here. Great. How many of you buy 90-day call options? Anybody? 6-month call options. Any leaps buyers? Cool. The problem is when you buy a call option, it is not an asset. It expires in 120 days. You can't pass that on to your kids. Do you realize that? But when you are trading and you are asset building at the same time, now you're leaving a legacy. So if we combine this idea of residual income from the stock market on a weekly basis, you know how much money you're going to earn. Wouldn't that be something? Yes, because we call it my program, Money Making Mondays. Every Monday, I know how much money I'm going to make from the market. Now, I have some pretty sexy trades that go on too, but I could tell you every single week where my $10, $15, $20,000 is actually coming from. Is everybody with me? Okay. All right, so here we go. So let's push on. Today we're going to talk about covered call writing and owning leaps options. Why? Because it's easy. And there is a trend that I'm seeing here at the Traders Expo. Everybody likes to be in ETFs. Who trades the SPY? Anybody? Perfect. The NASDAQ 100? Perfect. Not poo-pooing those trades at all, but it's crowded. So when everybody leaves, hello, last 30 days, hello. When everybody leaves that crowded trade at the same time, some of you know how to make money from that, and some of you don't. So I'm going to talk to you first about covered calls and why you should own leaps and stocks and build wealth so that predictable income gets bigger and bigger and bigger. Are you with me? Say yes, it's a seminar. In fact, anything I say up here, just say yes to. It's like saying yes to money and wealth in this approach. Okay, so in today's market, the way to make the real predictable money on Monday, place a trade on Monday, out on Friday, is by selling covered calls on Dow stocks. Now, most of you know what covered calls in. For those you don't, quick little synopsis. I'm going to buy 100 shares of something, like I did the other day, which is Disney, and I'm going to sell the right for someone else to buy the shares away from me at a higher price, called the strike price. For those of you who really understand what I'm talking about selling an out-of-the-money call for simplicity, right? So that way, I have two streams. The money that comes from selling the call, and when they buy the stock, I get something called a cap gain for selling the stock. I'm going to show you an example of that. This is predictable money. And if we add predictable money to our trading style, to our trading habit, you're going to love it. You can do all your other trades, but you'll know where your $5,000 a week is coming from. Here we go. So here's a picture of Disney. And by the way, in the Wealthy Investor Program, we call these stocks dates. We don't fall in love with them. These are not our soulmates. We don't text these stocks, how are you? Thinking of you, right? We're just in and out. Anybody ever date? Has anybody been on a date here? Raise your hand. Just work with me. Right. Who's married? Married people. Well, obviously you've been on a date, right? Okay. So when you go on a date, guys, what are you looking for? Don't answer that. I know what you're looking for. Well, in the Wealthy Investor Program, when we go on a date, we're looking for a stock that's in a strong uptrend. Over a 5-year period, it has a tendency to rise. Because we're going to use this as not only a residual income tool, but we want to be kind of where the institutions are. And I want to be, when the market pulls back, in that stock that they are not selling. Does this make sense? Now, why is it they're not selling off Disney? By the way, the last 30 days, there is a stock that I have a crush on. It's called Netflix. It's not a member of the Dow, but in the last 30 days, it dropped $101. This is growth stock. In that same 30-day period, Disney went down $4.95. Did you know that? Right. So I'm not losing all of my money. Why? Because I'm on a date with Disney constantly. Follow me in this example. Disney's a member of the Dow Jones Industrial Average. And by the way, why are the institutions not leaving Disney? Let's think about this one together. Netflix, $100 drop. Disney, $4.95 because of the dividend. Here's where it gets interestinger and interestinger, as my nieces and nephews say. You mean there's certain stocks in the stock market that BlackRock is never going to leave? Not as long as that dividend is there. There's certain stocks that all of the institutional players are going to stay in? Yes. Why? Because when you own 5, 6, 7, 8 million shares and that dividend is $1, you get $8 million per quarter. Why would you sell that stock? So that dividend serves as what we call downside protection. Does this make sense so far? Right. I'm not talking about sexy trades. I'm talking about shares of companies you should be in if you don't like losing money. Is there anybody here who does not like losing money? Raise your hand. Perfect. You and I have something in common. So how do I take this Disney stock that's in an upward trend, not flashy, and turn it into an income generator? Very simple, by selling a covered call. If Disney's trading at $118.27, the question is, would I be willing to give up this stock at a higher price? The answer, of course, is yes. Why? Because if I purchase 100 shares of Disney at 118 and change, and someone says, I'm willing to buy it away from you, Tyrone, at 119, you could all do this. You could have picked up, look at this, $3 per share, just for selling the right. Wow. So if I did this trade on 100 shares of Disney with that dividend for downside protection, on a Monday, and the out-of-the-money call is $3, I pick up $300 cash on a stock in the last 30 days that has gone down $4.95 with a dividend. All right, Tyrone. All right. Well, if I'm in this game to trade less and make more, why not do the same thing with 1,000 shares? It's 100 grand. We know that. Some of it's your money, some of it can come from margin, but it's $3,000 per week in income. $3,000 per week. Now, I'm no mathematical wizard, but I do know how to count. 3, 6, 9, $12,000 a month in predictable income. Is there anybody here who could use $12,000 in predictable income? Raise your hand. We all could use $12,000 in predictable income. But why is it no one but me is touting this strategy here? Why would that be? I get it, because it's not a high click strategy. I'm not constantly trading. I trade on a Monday, get my $3,000, I'm done, I'm out of the trade when? Friday. Monday, I gotta log in again, hook up to the internet, buy the shares, click, take another $3,000. I mean, I'm just exhausted. And I have to do this right before my Pilates class. You see why I'm a little edgy? Like, this is the American dream. This is money coming in from Disney. Some of you know if I bought the stock at 118, I'm willing to sell it at 119. If the stock is bought away from me, I make additional money, but I'm not even going to put that on the screen. Why? That's cheating. That's cheating. You have to start thinking about residual income if you want to asset build and get your account to $1 million within 5 years. You got to use this approach. Why? Because it's easy. TD Ameritrade is in the booth right across from me. They don't really want me to show you a one-click strategy because they make less money. But I am here to help you get richer, not them. Does that make sense? Okay, write down your questions because it's going to get prettier and prettier. Disney's a very good date. But that's not the only Dow component that produces these great call premiums. Now let me stop because someone is ultimately going to say to me, but Tyrone, these are low volatile stocks. If anybody knows anything about implied volatility, typically the implied volatility in Dow stocks is lower, except imagine institutions who want to trade stock. Look at this 5-year picture. Would you go on a date with a stock that looks like that? I would. Would you fall in love? You're not supposed to, but it's hard when you're in a stock that keeps rising and kicking you all this money. I always have another saying, don't buy the stock if you don't understand the story. Do you know how they make most of their money these days? Cloud services, right? Right? There's a trend that's going away, right? Amazon is going to reduce its cloud fees it pays to Microsoft over the next 5 years, right? Because the cloud is getting smaller and smaller. Do you all know what the cloud is? It took me 6 weeks to learn what the cloud is. Basically data storage, essentially, right? And when you sign a contract with an enterprise group, what's going to happen? They have built-in increments of pay increases. So this company's got billions of dollars coming to it. It's also Microsoft, pretty good reputation. Back to implied volatility. Institutional traders want to be safe too. So they're buying 1 million shares, selling the stock when it moves $1, they make $1 million, they buy it back. All of that movement in the stock, this is not a course on implied volatility, causes what? Call premiums to rise. And we're going into a rising interest rate environment, which has another effect on call premiums. So all of a sudden, for those who understand the technical aspects of how options are priced, it's a pretty good day. Buying the shares at 111.75, that out of the money call, this one was about, I had to wait 7 days-ish for this one. 7-day trade, 100 shares brings in $325 in how long? 3 minutes. 2 clicks, buy the shares, sell the call. Done. On 1,000 shares, it's $3,225 in 3 minutes for a week and a half. Anybody want to argue with that? Don't think you can argue with that. Why? Because it's predictable. Microsoft not going out of business. Standard garden variety covered call, cash in. 3, 6, 9, 12. Another $12,000 to $13,000 a month in predictable trades. If you're not excited now, I'd like for you to leave here, go get a job in the cemetery because you're dead. This is great money. This is great predictable money. All right. How do we take this and by the way, if you are selling covered calls during the dividend, the X date and the dividend period, you get the dividend on top of that. So not that you need to know everything about me. I just had my house in Rhinebeck renovated, right? And if you've ever gone through a renovation, you know some people don't show up on time. Let's just put it that way, okay? Okay. So I'm living my dreams. I got pianos coming, right? I got it raining from the shower. I put in this gorgeous kitchen. If you've ever sat down with someone to design a kitchen, they ask you crazy things. You want the handles like this? You want it like that? Do you want the thing? Do you want this or slide? I'm like, I don't know. Just give me the kitchen with the granite countertops. Oh, wait. We got to go through the whole book. How was the kitchen paid for? I thought this was the greatest thing in the world. From dividends on Dow stocks. Could you imagine that? The stock market brought me a kitchen? That's a pretty good deal. And from where I come from, dividends don't exist. That's something that happens for rich people. Oh, I'm one of them. I get it. Here we go. We got our cover call here on this wonderful stock here, rising Microsoft, $3,250 every 7 days. Look up the premiums. They're right there right now. For those of you who really are technical traders, I got to satisfy you as well. 30 days before earnings, these premiums will get larger. Because as the hedge funds come in and start trading the stocks, the premiums go through something called a volatility swell. Some of you know what that is, right? Implied volatility makes the call options premium. So they're tame now because the earnings have already been released. But they will be released again when? 13 weeks from now. Actually less. You're going to start to see these call option premiums swell up, get larger. Tyrone, you got to be kidding me. I'm going to leave the time for your questions, okay? Tyrone, this is like crazy. Are you serious about this? Yeah, it's predictable money. Hey, did I say stop trading what you were already trading? Oh, no. Do all the fancy trades that cause you to spend a lot of money in commission. Your broker will like you. By the way, at TD Ameritrade, I better stop this because they're really going to come after me. Someone's going to follow me out of here. If you spend a lot of money in commissions, they send you a mug. Has anybody got one of these mugs? 2 years ago, they sent out a light kit that had tools in it because I spent so much money in commissions, which I thought was really great. Now I can shine a light on my trades. I can drink out of the mug. They were like, thanks for spending all that money. Some of you are spending too much money in commissions and you're not keeping your trade simple. Does that make sense? If you remember nothing else from today, stop spending so much money in commissions. Employ some trades that are easy, like covered calls. Am I getting through to you here? Is this starting to make sense? You're not going to hear anybody say, hey, save commissions, save money on commissions. Everybody's going to say, here are all these fancy trades that you can do, and you're giving your money away in commissions. And let me just also say this from a working class point of view. You have to be aware of how you were conditioned. You were conditioned to think that the more you do, the more money you make. And that's not how wealth works. The less you do, the more money you make. Is everybody with me? Right. So your consciousness, your beliefs about your trading determine how wealthy you get. Trade a little bit less, make more money. By the way, do you know that your capital gains are higher on your short-term trades? We all know that, right? Hello? Yes. So by the time you pay commission and you pay your uncle, that was a very expensive year. Uncle Sam I'm talking about. Do we all get that's what I'm talking about? Okay, cool. That was a very expensive year, but it felt like you made a lot of money. But you didn't because you had no wealth. All right? Okay. Now that we're just knocking at the door of this easy money, how do we take these trades and put them into wealth building? Well, the first thing we do is we go to the next slide. It's all fourth grade math. You have to be a genius to make a lot of money in the stock market. Just keep it simple. Why? Wealth is nothing but a series of positive habits. Just do what rich people do and you will join them. Well, this is interesting because if I'm picking up $325 per share just once per month, I'm showing you the call premiums are getting larger. But let's just go with I'm trading once a month and I'm making $3,250. Does everybody understand me on that? So in 12 months, little fourth grade math, that's got to be about $39,000, excluding dividends that I'm getting on the shares and being called out, cap gains on the transaction because I sold the stock for higher. Okay? So that's $39,000 guaranteed income. Can I get a round of applause for $39,000? that $39,000 should be yours. I traded less. I didn't spend that much in commission. I didn't really need the money because I like trading. So now I have capital the market gave me to invest in other Dow stocks. Are we cool so far? Right? Because this is a cycle. Now we're going to start a cycle of wealth instead of just trading to be busy and getting mugs at the end of the year. So what are we going to do? This is the power of residual income, hitting your account like clockwork. You all said you wanted more income. Here it is, right there, up on the screen. Well, now that we've got the basics down, now we can layer this for the options traders who are going to be building wealth at the same time. All right, we got $39,000 coming in, about $3,800 a month if we're getting called out. We're going to invest, if you're taking notes, write this down. Here's a term you've never heard before. You're going to invest these profits in other Dow stocks, but not just any Dow stocks, superior Dow stocks. But what are superior Dow stocks? If you look at the Dow Jones Industrial Average made up of 30 stocks, you just go on Yahoo Finance and you pull up a chart for 5 years, you'll discover there's 6 of them that consistently go up. Down markets, up markets. So really all we're going to do is buy those shares, hold them, buy more of them when they rise. There's only 6 of them, and they also pay a dividend. So therefore, the institutions are not going to leave them. Wow. Hey, Tyrone, do you have a slide with some of the superior Dow stocks? I don't. Good night. You've been a great audience, ladies and gentlemen. All right, here we go. Let's try this. I'm just going to go through a few of them, right? First is Visa. Look at the 5-year chart of Visa. Do you know how many pullbacks we've had? And this stock is going higher. Is this good news? This is great news. I'm showing you the pattern. If I had taken that $39,000, $3,900 that's coming in, right, every single month, invested it one time in Visa, held the stock for 5 years, it's now worth $11,300. If I'd taken $39,000 whole year, put it in stock once, that's now worth $113,000. What am I doing? What are you doing? We are asset building in stocks that institutions don't leave. But I got this trader thing in me too. I want to build assets, but I still want to keep making money along the way. That's when I'm going to turn to LEAPS options. For those of you who don't know what LEAPS options, long-term equity anticipation securities, Delta 80s, where are my Delta 80 LEAPS people, right? Lower risk, lots of intrinsic value in that option. Theta means nothing to a Delta 80 because it's barely present in that Delta 80. Not me, that's optionology. So I'm buying Delta 80 LEAPS. When there's a small movement in the stock, there's a magnified movement in the option. Even that Delta 80 option is increasing exponentially. Why? It's moving faster than the stock. So what you see at the 113,000 is the purchase of the shares. This Delta 80 LEAPS option is essentially doubling in value every $20 because for those of you who know, it converts into a 100 Delta and it just starts to move lockstep with the stock. And I don't even work at Visa. I'm just getting richer because the institutions won't leave this stock. Now I am running out of time, but the story gets even better. Here's how it goes. So I'm getting richer from the stock. The stock is rising. For those of you who like to use margin, my asset is growing. I have to be getting wealthier. And most people think Visa is a bank. It is not. It is a brand that licenses its name to your bank. Your bank issues you a Visa card. As part of that licensing agreement, Visa, listen, are you sitting down? Of course you are. Visa gets 3 cents on every credit card transaction every day worldwide. 3 cents. How many people, get ready to raise your hands, how many people would like 3 cents on every Visa transaction worldwide every day? Right. That's why the stock is doing that. They keep raising the dividend to say to the institutions, this is the prettiest girl in the room. And this pretty girl keeps going, over here. And the institutions are like this. They're all guys. Right? So they can't stop buying more of the stock that's getting 3 cents every single day. Who's ever bought anything online? Raise your hand so I can see who you are. Great. Most of you will buy something online for sure within the next 60 days. I don't know if you've noticed, I've got my new Mac here, the fancy smanchy one. When I buy something, there's no slot for a $50 bill. I can't find it on my computer. So I have to use a what? A Visa card. Right? Right. So it's 3 cents. I don't see it. The merchant loses 3 cents on every transaction. I have 2 daughters, right? I am a divorced man. I have 2 daughters, Sasha and Malia. And I'll wait. Yes, we can. Okay, so Jacqueline, they like that, especially in this section. Put that in the book. All right, so my daughters, because I'm trying to teach them that a man is not a plan, right? They already know how to choose superior Dow stocks. So I love to cook on the Sunday. At my house, we have stock market Sundays because all wealth is taught. And I say, who's going to be the first stock market millionaire? Me. Because I want them to be programmed, right? And I say, why you? And the younger one goes, because I'm a great stock picker. And the older one goes, Dad, she doesn't even use your system. Do you see how they're programmed? Right? They're already dialed in to superior Dow stocks. And their generation only knows purchasing online. And by the way, I have to stop here. I see some of you at the presentation yesterday. How am I doing so far? Is this working out for you? Cool, so check this out. So everybody wants the brand new cannabis stock. You know, Canada has legalized everything and it's going to sweep across our country. Where's the cannabis stock? Remember, Tyrone Jackson, that's your cannabis stock right there. Some of you will know what I'm talking about after I say this next thing. A few of you will go, I still don't get it. It's okay. So some of you are going to be purchasing weed from Canada using a Visa card. Yes, the people in the back, you know what I'm talking about. Okay. And when you think you're getting weed, some of it's going to be oregano, I'm just telling you right now. And you're going to go, I got to send it back. You can call Visa and go, this was not what I ordered, and they will what? Call the merchant. Stop working with that merchant, right? So this cannabis craze, for the people who are buying it on the internet, see the people in the back in this section right over here, okay? They're in on it. Do you see why they're a superior Dow stock? Raising dividend. They're in on every major transaction. Don't you think they have a deal with Amazon? Every place that you shop online. This is one of the best kept secrets. You came to this whole conference. I'm showing you the #1 cannabis stock because it's like taking a toll on a bridge. I'd love to own a bridge, but I really love owning Visa. So here's what I'm going to do. I'm taking my covered call premium. I'm buying more Visa and Delta 80 Leaps. I can trade in and out of that as the stock fluctuates. I'm getting the benefit of shareholding and trading all at the same time in a stock that the institutions are not leaving. It just makes sense. It just makes sense. It just makes sense. We don't need all those fancy trades that cause us to give our money away. Just look at Visa. Okay, running out of time. Here we go. Home Depot. Home Depot. What makes Home Depot so great? What's a Dow component? Look at the 5-year chart. Is that pretty? I don't know if I want a long-term relationship, but I'll certainly hold the stock as it continues to rise. And it is also the other pretty girl in the room that keeps raising the dividends. So the institutions do what? It's a technical term. They just gobble the stock up. Okay, secret if you're going to use the wealthy investor approach. You only buy more shares when the stock moves $5. So before I go on a date, I'm going to buy 10 shares. I'm going to see how the stock does. Where did I get the money to buy the shares? From the call premium. I'm going to start small. See, if I'm in at 100, I need the stock to move to 105 to prove to me that it's worthy of more of my cash because it's an asset. If it doesn't move, I don't buy that. I wait for Visa to move. Does this make sense? So this way, it keeps me from over-investing, keeps you from over-investing in something that does not move. Right? Because I only invest in stocks that move. I wait for them to come to me. I am patient, and I asset build like that the same way. Here we go. $3,900 invested once 5 years ago, now worth $9,700, not even counting the dividends. $39,000. Oh, look at this number, ladies and gentlemen. Look at this number. It's worth $97,000. I didn't do anything. They just ran the stock up. Now, what you don't know about Home Depot is when there's a tragedy, they have a system. They know how much lumber to bring, so on and so forth. The reality is I live in Malibu, right? And before I came here, I was evacuated on Friday at 9:15 from Malibu. I went down to PCH just like everybody else, not sure if my townhome is still there. But I will find out if we get the all clear. I got to go to my house in New York. I'm blessed. I have a whole nother home to go to, right? Home Depot already setting up the system to rebuild. That's why the chart looks like that. And there's going to be a lot of FEMA money coming in to California, which is, I'm not saying we should capitalize on a tragedy, but the stock market is a series of patterns that just repeat themselves over and over. So if I'm going to hold Home Depot now, I might as well go get my Delta 80 Leaps in the money with all that intrinsic value. I could trade that, thank you, and hold on to the shares as they rise. Wealth is a system. It's a system. It just makes sense. It just makes sense. It just makes sense. Keep your commissions low. Stop giving all of your money away. But this wealthy investor thing, on to something. Here we go, next stop. Oh my goodness. This stock is like a supermodel to me. That's how beautiful it is. What's the name of this company? Is it a Dow component? Yes. All the other talks you went into, nobody told you to grab Boeing with all that institutional money flowing in, keeps raising the dividend. Institutional investors, they're starving guys. That's a technical term we use in the market. Stock keeps rising. $3,900 invested from my covered call premium is now worth $14,000. Apparently, the institutions love this stock. They're not going to break up with it, and neither am I. $39,000, $144,000. Now, if you like to do math like me, only the fourth grade kind, notice the $39,000 is a one-time investment. What happened if I kept buying it with covered call premium every $5? That's how you get a house in Malibu. Thank you very much. I appreciate that. All right, here we go. I'm just showing you wealth is a system. Wealth is a system. The wealthiest people in the world are not doing bull call spreads. They're buying more stocks that the institutions won't leave. If you learn a system that is predictable, you will be like this guy, crazy, happy, profits on a regular basis. Does this make sense? How many of you feel like you learned something you didn't know before you came here? Thank you very much for your time. I appreciate it. But I'll tell you what we're going to do. Thank you. Thank you. Sit down. That's too kind of you. Sit down. I feel like Wayne Newton up here. Standing applause, everything I say. I really want to leave some time here for just general questions, because the number one question everybody says is, what do you do when the stock goes down? So when the stock goes down, you hold it. No one's going to buy it from you. Next Monday, it's yours free and clear. You bring in more easy income. All right, let's go to some questions. The lovely lady in the back. What's your name? Okay, Debbie. No, there is no stop. I entered into a contractual agreement with someone to sell them the shares. I can't stop out. I'm in that contract. No, the $5 is on the stock that I'm investing on. These are stocks that I am trading. I want to be called out. I want to give up the shares. It's a trade. It's a slow motion trade for 5 days, right? So I don't have to stop. There's no fear here. This is all, how do I get that predictable money every single month? There's no need to stop. Say it again. As they say on the back of the Head & Shoulders bottle, wash, rinse, and repeat. That's all it is. It's so easy, most people don't want to do it. I'll work this side of the room. Yes, sir. Yes, because before earnings, the weekly calls plump up. Therefore, more easy money coming into my account. You get your money in T+1. You buy the stock on Monday. The call premium's in your account. You can pull. I have students who pull it out and go, I'm going to live off of this. Bravo for you. Yes, sir. No, I'm buying the leap. Small movement in the stock, magnified movement in the option. The stock moves $3.50. I'm out of that leap. The institutions are pushing it up for me. Does that make sense? So it's a different kind of trade. I'm just riding the wave with them. Let's go to this side of the room. Someone in the back, just to be fair. Okay, this gentleman. Yes, sir, your name. Yes, Charles. You want to know what's realistic in terms of what? Well, it's all realistic if you buy the stock and sell the call on Monday. Yes. Correct. Yes. 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 For only 126? That's great money for 126. No, that's why I was saying when earnings are coming out, the call premiums swell up. Does that make sense? You're going to get larger premiums 30 days before earnings. So if you want to become an expert cover call writer and you don't like $1.25 per share, I always say to my students, are you serious? You're turning away money? Right? Like that $1,000 is not good enough for me in 4 days? Well, $1.25 is just as realistic as $3. You're just going to get $3 when you get closer to earnings. Can I just stop here for a second? A lot of people go, I don't want to make $1,000 in 4 days. I'm like, are you kidding me? Most of America doesn't make $1,000 in 4 days. Sitting at home, that's why I talk to you about your consciousness. Yes, the gentleman in the blue shirt. Yes. No, you're still selling covered calls if the market turns bearish. Yes. Correct. Correct. Yeah. No, because, tell me your first name again? George. Okay, so I get what you're saying. In other words, the market pulls back. I sold a call that was just out of the money. No one's going to buy the stock. I got free premium. Yes? Now the stock drops $3. It has to do with your cost basis. So if I bought the shares, for those of you who know, at 99, and I took in $2 and called premium, my cost basis is now 97. The thing about covered calls is you can't beat it on a Dow stock because your goal is to always be pulling in income. So in a pullback, instead of getting $3 a share, am I going to say no to $1.75 per share in 4 days? Are you kidding me? There's no, I'm going to take that money for the market. It's free. Yes, ma'am. Totally. Yes. Yes. That is correct. What is your name? Yes. It's not more risk. You're in a Dow stock that pays a dividend. Your money might not turn as fast. She's talking about, what if we did this every 2 weeks? So I'm willing to buy the stock and sell an out of the money call for 2 weeks. Yeah, you'll take in a fatter premium and collect your dividend. You're not, so one of the things that is puzzling me is like people are like, but you're losing money. You're not losing anything. If just this strategy, go home and try it on Monday. If you just make $1,000 a week, it's just $4,000 guaranteed per month. It's just $49,000 in the next 52 weeks. That's all it is. We all know people in our family who actually get in cars, go to work, and some of them don't even make $49,000. And you made it sitting at home. Is that good? Yes. There's no amount of money where you could say, that's not acceptable to me. I don't want an extra $750 a week guaranteed. Really? Why? What are you holding out for? $7 million. Good luck with that trade. Here we go. Yes. The risk is in any stock, like with any stock, that the stock could decline. But we just looked at stocks. In the last 30 days, Disney, $4.95 decline in the middle of a very significant pullback. These are not risky stocks, other than do they go down from time to time? Yes, but if you could still grab $750 a week, pretty good. Yes, sir. Okay, so I have a saying. I have a saying. The stock market is one game and 100 ways to play it. Could you do that? Yes. Did they give me enough time to go through all the options? They did not. So like a raging crowd, you go back in there and you go, he should have had more time. Just kidding, don't do that. All right, here we go. Yes, sir. Couple more questions, we'll call it a day.
What service do you provide? You keep talking about.
Okay, so some people want to know what Dow stocks to trade. So if you go to witradeschool.com, you sign up. It doesn't cost you a lot of money. You can watch, people call it, it's like Netflix for stock market traders. Every week, these are the trades that I'm doing, and it's in video. But the thing I love is you can go back and watch 3 years of trades, and then I answer questions every single week. You submit it, hey, how about this stock, in and out, and I give you the answer, right? So like we got a lot of questions about Disney, the Disney trade that I'm trying to push everybody into, because that stock's not gonna drop another 60 bucks. So last week I spent a lot about Disney. I haven't seen the questions yet, they've just come in. So WI Trade School, if you want to follow my trades primarily on Dow stocks, and then if you want me to send you the trades, it's a different level of trade school. But your first month is $49. So let's think about this. $49 versus a couple $1,000s a month. Most traders really like it. And I have people who trade from all over the world. You don't have to go to trade school. I'm just showing you a strategy that works. 2 more questions and they're like, you gotta wrap it up. Yes, ma'am, in the back. Yep. Correct. It doesn't get exercised. Yep. It's income, and it always reduces your cost basis. Yes, because the IRS is just going to want to know, what did you pay for it and what did you sell it for? Until the stock is sold, which eventually it will, and then you will trigger a capital gains. Your accountant will write that down. You will buy the stock back and keep it going. Does that make sense? By the way, I didn't have time to go through this. This is a great strategy in your retirement account because it produces weekly income. Last question, somewhere over here. Who's feeling lucky? It's Vegas. Roll your number. Anybody? Well, I'll go to this gentleman. Yes, sir. Never. Everybody know what happened at GE? Listen, this is the thing about this market, and it's hit all of us. Give me 30 seconds and you all can go. You've been very wonderful. When the CEO keeps saying, we're going to earn less per quarter, listen to them, right? It's like people who don't leave their houses. I was born here, I was raised here, I'm going to die. Oh, you're going to die here, right? It's the same thing with GE. They kept telling us, like, things are kind of going wrong. That's why we stay with superior Dow stocks where they say things are going well. You guys have been great. I'll stick around if you have some questions. Enjoy the rest of your day.